It is 9 a.m. on the dot on this Monday morning, the 26th of January, 2026. Hey, it's 1/26/2026. There's got to be some kind of astrological numerology going on there, right? All right, so you're here for all the Bitcoin news that you can use and more from around the world. We're going to start in Colombia today. Their second largest pension fund is going to start Bitcoining, and then we're going to go over to Switzerland, where UBS is jumping into the Bitcoin game as well. And then I'm going to talk a little bit about silver and gold, just because there was an interesting nostr note that I'm just not going to be able to not tell you about. So then we're going to move back over to the U.S., where Oklahoma and their state employees and vendors might be getting paid in Bitcoin. Then back to across the pond to the Netherlands, where they are hatching some evil machinations to destroy the wealth of their citizenry. Then AI swarms in the second part of the show. Ooh, it could escalate online misinformation. Oh, the horror. And then hash rate is sliding, as you might imagine, on the Bitcoin network because of this, what seems to be a pretty massive storm in the south and southeastern parts of the United States, reaching all the way up to Boston. And I saw pictures of Nashville. I saw a picture of a single residential block in Nashville, Tennessee, and it looks pretty grim. I mean, power lines down, telephone poles down, huge trees just laying across the street. It looks like it got hit by a tornado, but it's just all the ice. Then I want to say a few words about plebeian market, and then we're going to end with Sailor. He's sailing away on a big old orange boat. But Colombia first. Colombia's second largest pension fund to offer Bitcoin exposure. This is out of Cointelegraph. Colombia's second largest private pension and severance fund manager, AFP Protección, is preparing to launch an investment fund with exposure to Bitcoin. Juan David Correa, president of Protección SA, confirmed the initiative during an interview with local outlet Valora and Analytic. Valora Analytic. And according to Carrera, access to the product will be limited and granted only through a personalized advisory process designed to assess each investor's risk profile. Only clients who meet specific criteria will be able to allocate a portion of their portfolios to Bitcoin. Oh, God. Quote, the most important element is diversification, Correa noted, adding that those who can participate will find... hold on. My apologies. I had to pause there to take care of a little issue on the phone. So where were we? Oh, yeah. The most important element is diversification, Correa noted, adding that those who can participate will find a space for a percentage in their portfolio if they so wish to be exposed to this type of asset. Protección's move follows a similar step by Scandia, which began offering their Bitcoin exposure in one of its portfolios back in September of last year. With this launch, Protección becomes the second major pension fund administrator in Colombia to enter the digital asset space. Bitcoin Fund will not change core pension investments. Protección said that the new Bitcoin-linked fund does not represent a shift in how the bulk of Colombian pension savings are managed. Fixed income instruments, equities, and other traditional assets remain the core of the pension portfolios. Instead, the product is positioned as an additional option for qualified investors seeking diversification. Founded in 1991, AFP Protección manages more than 220 trillion Colombian pesos, which works out to about $55 billion US, in assets for over 8.5 million clients across mandatory and voluntary pension plans and severance accounts. The broader mandatory pension fund market in Colombia reached 527.3 trillion pesos as of November of 2025. And Colombia, or rather earlier this month, Colombia's tax authority, DIAN, introduced a mandatory reporting framework for crypto service providers requiring exchanges, custodians, and intermediaries to collect and submit user and transaction data. The resolution aligns Colombia with the OECD's Crypto Asset Reporting Framework, or CARF, enabling the automatic exchange of crypto-related tax information with foreign authorities. Under the new regime, service providers must report identifying details and transaction data for reportable users, comply with due diligence and valuation standards, as well as face penalties if they fail to meet those requirements. So a little bit of spying going on their citizenry. God forbid anybody should actually do anything without somebody going, hey, man, what are you doing over there? All right, so Colombia's second largest pension plan. So $55 billion may not seem like a lot when we compare it to pension plans over here in the United States. But, dude, 8.5 million clients in Colombia, that's a lot of people. And if you get even 5% of those to start allocating into some Bitcoin, well, then you got something there. So Colombia is definitely on deck. Now, over to Switzerland, where UBS plans Bitcoin trading for select wealth clients. Micah Zimmerman out of Bitcoin Magazine says the UBS Group AG is preparing to offer Bitcoin trading to a select group of private banking clients in Switzerland. According to a Bloomberg report citing people familiar with the matter, the Swiss banking giant has been in discussions for several months about launching a cryptocurrency trading offering and is currently in the process of selecting external partners. The service would initially be limited, of course, to a small subset of Swiss private banking clients, with a broader rollout possible at a later stage. Yeah, let's get our friends on board first and make sure that retail sits there and sucks swamp water all day. Rather than building a full digital asset stack in-house, the banks are reportedly evaluating partnerships with third-party providers that could handle trading, execution, custody, and compliance. A partner-led model would allow the bank to offer crypto exposure while limiting balance sheet risk and operational complexity, and such an approach mirrors strategies adopted by other financial institutions entering the digital asset space, particularly those seeking to comply with stringent capital requirements under the Basel III framework, or Basel, however you want to pronounce it. Under the proposed structure, the company would initially allow eligible clients to buy and sell Bitcoin, Bitcoin and shitcoin number one, the two largest digital assets by market cap, while the initial rollout would focus on Switzerland. Bloomberg reported that UBS is considering expanding the service to other regions, including Asia Pacific, as well as the United States, depending on regulatory clarity. UBS currently manages around 4.7 trillion US dollars in wealth assets as of September the 30th, making it the largest wealth manager globally. According to Bloomberg, even a limited crypto offering could represent a meaningful step toward broader institutional adoption of Bitcoin within traditional private banking. I'm not so sure. I think BlackRock has a lot more than $4.7 trillion in wealth assets, but hey, let's move on. The bank has historically maintained a cautious stance on cryptocurrencies, because if you remember back in November of 2023, UBS allowed wealthy clients in Hong Kong to trade cryptocurrency-linked exchange-traded funds, joining competitors such as HSBC, but they stopped short of offering direct spot crypto trading. A UBS spokesperson declined to comment on the specifics of the Bloomberg report, but did confirm that the bank continues to explore digital asset initiatives. Quote, as part of UBS's digital asset strategy, we actively monitor developments and explore initiatives that reflect client needs, regulatory developments, market trends, and robust risk controls, the spokesperson said. Quote, we recognize the importance of distributed ledger technology like blockchain, which underpins digital assets. We still got a long way to go with all this. Oh, God. Okay, so on to silver and gold. They're making all-time highs. I saw silver at $113 an ounce earlier today. We'll get a better view of that price when I do the market report in the middle of the show. But I ended up posting on Nostr a screenshot of something that I saw on Twitter. So here's this guy, Alex Stanzik, and he has a screen capture of his own of a tweet from Stoic Trader. But let's read what Alex is saying about this tweet that he's captured here. He says, buying gold and silver is relatively easy. Selling it, not so much. As a manager of a physical gold fund with access to the largest refineries in Switzerland, we were able to liquidate metal positions in a trusted network with very little friction. The same thing is not true for the vast majority of gold and silver investors unless you are in an ETF or working already with a large institution with good delivery refinery connections. Everyone else has to take a huge loss versus spot if you can find someone to take it. So what is this prefacing? Well, this tweet by Stoic Trader, who says, and I quote, I'm sitting on 1,000 ounces of silver bars, bought physical, did what everyone says to do, real assets, outside the system. When everything collapses, you'll be glad you have it. I tried to sell some last week, trying to sell it today. Refineries won't touch it. Dealers are lowballing 30% under spot. Banks look at me like I'm selling contraband. Turns out owning something and being able to exit something are two very different skills. So let's just summarize. This guy sitting on 1,000 ounces of silver, he cannot sell it unless he takes a 30% loss. And even then, according to what Alex is saying, he might not even be able to offload the entire 1,000 ounces at a single dealer. He's probably going to have to go around if he really does, and that's if he wants to take a 30% haircut. So instead of $113 an ounce, he's going to be getting like 78, or I don't know, whatever the math works out to be. So, but even then, if he bought it at like, I don't know when he bought it, but like, let's say he bought it at $15 an ounce. Screw it. Let's say he's bought it at $20 an ounce. He's still going to make like $58 an ounce on it. That's not bad. But can he actually offload it? And think about it this way. That does not sound like high quality liquidity to me. It really doesn't. If I've got to physically take 1,000 ounces of silver, put it in my car, drive around to precious metal dealers, offload some of it at one place, some else, more of it at another, and then maybe the rest of it at 2 or 3 other places. This is a gargantuan pain in the ass. And it sounds to me like this guy he literally can't find anybody to actually buy it. Hell, I'll call a refinery. Surely they'll have it. They don't want it. Okay, well, I'll take it to a metal dealer. No. I'll try to sell it to a bank. That one I'm still not sure about. Like I wouldn't take like an ounce of gold to Wells Fargo, walk up to the teller and say, I want to exchange this for dollars. Because I don't think that's actually a service at a bank. So I don't know where he was going with that one, but still, it sounds to me like, at least in this one particular case, this dude's having problems offloading physical metal. So just be aware that Bitcoin still and always has had and always will have a unique property of being instantly liquefiable. But more than that, I don't have to put it in my car. I can sell it in my underwear at 4:00 in the morning on a Sunday in my own home. I don't need to get into a car and go anywhere to do this stuff. And that makes it significantly more important when you start thinking about, well, okay, let's say you live in, I don't know, Colombia, and shit in Colombia goes south and you try to vacate to any other country, go down to Brazil or over into Venezuela because maybe things will stabilize there. You've got to cross a border. Are you really comfortable crossing a border from Colombia into any other Latin American country with 1,000 ounces of physical silver bars on your person? I would not be comfortable at all. So again, this is where the 12 to 24 word seed phrase comes in. You could actually stitch that into a garment if you have a knitter in your family who knows how to read knots. And this is a thing. This is a thing. In fact, in Les Miserables, it's either in Les Miserables or it's in Tale of Two Cities. I cannot remember when, but the French Revolution, there's a character that she knits the names of all the enemies that they want to take out into like a scarf or a sweater or something like that. Anybody who looks at it, even other knitters that just casually glance at it, are not going to actually see the telltale signs that there are names actually written in that knitted good, right? Only so you could just, if it's a scarf, you just wrap it around your neck, cross the border, nobody gives a shit. And all of it, especially if it looks ratty and like somebody doesn't want to steal it from you or something like that. And then you decode it on the other end by looking at the knots. Now that's an extreme case. Hell, I could probably write 24 words on I don't know, something and put it into a film canister and nobody's really going to know. And I'm not giving anybody any advice on how to walk across a border with 24 word seed phrase. You do what seems right to you, but that, no matter what you do, carrying 24 words is a hell of a lot easier than carrying 1,000 ounces of silver, much less then. And then once you cross the border, do you have the same liquidity issues with silver as this guy has in the United States? See, that's sort of what I'm getting at here. Nothing about Bitcoin, and because the sentiment is clearly not on our side right now. And why, and the only reason why is because gold and silver are going up this time while Bitcoin is basically kind of flat. And we've got a 35% drawdown. But right now it's just bouncing around and it's driving everybody absolutely batty. But the only reason it is because we see these other assets increasing in price, and we remember what that felt like for us in Bitcoin. Honestly, I think this negative sentiment is very misplaced, and I wouldn't pay it very much mind. However, if for whatever reason it's making you feel kind of dirty, you can always go over to my friend SoapMiner at SoapMiner.com, where he's got handmade tallow soap. Dude, this is the soap your great grandma used to make. It's gentle, natural, and moisturizing, and free from anything toxic. These are humble soaps, and once you try these soaps, you will love these soaps. And that's directly from SoapMiner's website. And I use SoapMiner soap. And the reason I haven't ordered any more soap from SoapMiner is because his soap lasts so damn long, and I got a family of 4, that I'm still on my first 4 bars. Well, okay, I think I've got, after this bar of soap that I've got on the counter is done, I got 1 more bar of soap, and that's going to last my family of 4 for another 2 months. Dude, go get this soap. Honestly, it's got the base soap is 3 ingredients. It's like 100% grass-fed beef tallow. It's got distilled water, and it's got lye. That is the base of soap. Anything else that he puts in, like goat's milk, if he's got a goat's milk tallow soap, it's everything I just said, but it's got goat's milk in it. And that's it. And if he uses something like peppermint, he's using a high quality, peppermint essence in it. And that's it. Unless he, like his redacted soap has got pure carbon in it. Really good to get those hands really, really nice and clean. But it's just carbon. He's not using parabens or any of the crap that you see in general soaps like at a supermarket. So go to SoapMiner.com. That's SoapMiner.com. Make sure you use the code Bitcoin and to get 10% off the total purchase over at SoapMiner.com. Use Bitcoin and as the coupon code. Let's run over to Oklahoma, where right now they're probably freezing. But while they are freezing, they have introduced a bill allowing state employees and vendors to the state to be paid in Bitcoin, according to Micah Zimmerman, the only remaining writer, it seems, for Bitcoin Magazine. Oklahoma lawmakers introduced legislation this week that would allow state employees, vendors, private businesses, and residents to negotiate and receive payments in Bitcoin. Senate Bill 2064, introduced by Senator Dusty Devers during the 2026 legislative session, establishes a legal framework for the use of Bitcoin as a medium of exchange and compensation without designating it as legal tender. The bill explicitly states that it does not conflict with the U.S. Constitution's prohibition on states coining money or declaring legal tender other than gold and silver, instead recognizing Bitcoin as a financial instrument operating within existing legal frameworks. Now, if the bill is enacted, it would permit Oklahoma state employees to elect to receive salaries or wages in Bitcoin, either based on the asset's market value at the start of a pay period or at the time of payment. Employees would be allowed to revise their payment preferences at the beginning of each pay period and could choose to receive compensation in Bitcoin, US dollars, or a combination of both. Payments would be deposited either into a self-hosted wallet controlled by the employee themselves or into a third-party custodial account designated by the employee. So that would be like, hey, send it over to Strike or something. Anyway, the legislation would allow vendors contracting with the state to opt into receiving payment in Bitcoin on a per transaction basis. The Bitcoin value of those payments would be determined by the market price at the time of the transaction, unless otherwise agreed upon in writing. Beyond state payroll and procurement, the bill broadly authorizes private businesses and individuals in Oklahoma to negotiate and receive payments in Bitcoin, reinforcing its use as a voluntary medium of exchange across the state economy. So, SB 2064 includes provisions aimed at reducing regulatory friction for Bitcoin native businesses. So, firms that deal exclusively in digital assets and do not exchange them for US dollars would be exempt from Oklahoma's money transmitter licensing requirements, according to the legislation text. The bill directs the Oklahoma State Treasurer to issue a request for proposals for a digital asset firm to process Bitcoin payments for state employees and vendors. In selecting a provider, the Treasurer must consider factors including fees, transaction speed, cybersecurity practices, custody options, and any relevant state licensure. The Treasurer would be required to finalize a contract with the provider by January the 1st, 2027, and is authorized to promulgate rules to implement the program. Back in January of 2025, Oklahoma State Senator Dusty Devers introduced a similar initiative called the Bitcoin Freedom Act. It was a bill designed to let employees, vendors, and businesses voluntarily receive and make payments in Bitcoin while creating a legal framework for its use in the state economy. This move follows other states like New Hampshire and Texas in exploring ways to integrate Bitcoin into public finance. So there you go. Oklahoma back on deck. So these states that had failed Bitcoin legislation last year and the year before are starting to re-up the game. It's like it's not going away. And people like Dusty Devers see that and are like saying, screw it, let's put it back on the table. And it may just attract people from other countries that want to escape horrible regimes like the Netherlands, which I know sounds strange that I would say that the Dutch is the horrible regime, but you'll probably agree with me after this one. From atlas21.com, Netherlands. Government considers tax on unrealized gains from 2028. According to Telegraph, the Dutch parliament is preparing to vote on a tax reform that could change the Box 3 wealth taxation system. The most controversial aspect concerns the introduction of an annual tax rate or an annual tax on unrealized gains from assets such as stocks and cryptocurrencies and bonds, in addition to direct income like dividends. The new system is known as wet werkelijk. I can't pronounce Dutch. I'm sorry, but if approved, it's expected to be fully implemented from January the 1st, 2028, and under the structure, taxes will be calculated both on changes in asset value and on income received annually. Consequently, both realized and unrealized gains would be subject to taxation. The proposed taxation rate, 36%. Say goodbye to a third of your wealth. During the debate held on January the 19th in the Tweede Kamer, the Dutch House of Representatives, members of parliament raised over 130 questions to the acting Secretary of State for Taxation, Eugene Heingen, I think is how you pronounce it. And under the new rules, taxation on Bitcoin and other cryptocurrencies would also apply to on-paper gains, meaning those that exist only virtually because the investor has not yet sold their assets. This method of taxation is considered undesirable by a majority of parties in parliament, and Heijden himself admitted during the debate that the caretaker government would prefer that tax returns would prefer to tax returns only when they are actually realized, but he stressed that such a solution would not be technically feasible by 2028. The central issue is economic. Delaying the implementation of the new tax system would cost the Dutch treasury approximately 2.3 billion euros per year. This fact has convinced many parties to support the reform, albeit reluctantly. Well, not reluctantly enough. Among the supporting parties are VVD, CDA, JA21, BBB, and PVV, who expressed their backing primarily for budgetary reasons. D66 and GroenLinks PVDA will also vote in favor, but for different reasons. These parties support in principle the taxation of unrealized gains, seeing it as simpler to implement and capable of preventing billions in lost revenue for the state. GroenLinks PVDA MP Luc Stultjens also expressed the intention to impose even heavier taxation on those with higher capital gains. Critical voices have also emerged regarding the complexity of the new system. Christian Unie MP Peter Grinwis highlighted that the new wealth tax will be complex, if not more so than the current system. Quote, "We say every year that it should be simpler, but we do the opposite. So much complexity. Are we really going to inflict this on our country?" he said during the debate. I feel really bad for the people in Netherlands. I mean, first it was the farmers just basically being treated so poorly that they basically protested for like an entire year. I haven't heard a single thing about the farmer protest in Netherlands in quite a while. So I don't know if it's like the whole yellow vest thing in France where it was every day for months and months and months, and then you heard nothing about it. And come to find out, that shit was still going on. The media just wasn't reporting on it. So I don't know if the Netherlands farmers have calmed down or not. But first it was the farmers getting screwed. And now they're just saying, you know what? We hate all of you. We want all of your money. Give it to us, or we're going to throw you in a hole for the rest of your life. Let's run the numbers. CNBC futures and commodities, natural gas soaring today, up 32.5%, according to CNBC. When I looked over at TradingView, and in fact, I want to do that right now because there was a huge discrepancy in the price, and it may be because of a delay. I don't know, but let me pull up TradingView just so that I can see it again. Do natural gas. See, TradingView is showing me, and this is natural gas from Pepperstone is the provider of this price. It's saying that it's only up 3.9% to $5.40. However, CNBC has it listed as being up 31.89% to $6.96 per thousand cubic feet. This is entering expensive territory for people, especially those that are affected by the winter storm. Brent North Sea down 1/4. West Texas Intermediate oil is down 0.4% to $60.82. Gasoline down 1.4 to $1.82 a gallon, and Murban crude is down 1.25 to $65.13. All the shiny metal rocks are shining brightly this morning. Palladium up 6.78%. Gold hitting another all-time high, 2.13% to the upside, brings it in $5,085.06. Platinum is up 3.8. Silver just beating the hell out of everything, 13.5% to the upside, sitting at a price of $115 per ounce for silver. $115 per ounce. If you can sell it, I mean, if you can get rid of it, I guess. Chocolate or cocoa is up 3%. That's the biggest winner of the day. The biggest loser in ag is cotton, 1.82% to the downside. Then we go over to livestock. Live cattle up 1/4 point. Lean hogs up 0.65. Feeder cattle up 0.5. S&P is up 0.6%. NASDAQ up 0.7%. The Dow is up 0.4%, and the S&P Mini is the only one in the red, down 0.17% today. And then Bitcoin bouncing around. $87,490 brings it a $1.75 trillion market cap. We can only purchase 17.1 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,980,635 and 1/2 of. Average fees per block are remaining at 0.02 BTC, taking in fees on a per block basis. There's about 20 blocks carrying 53,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities are going to get you in at 0.9, but block times have topped 12 minutes because we lost a lot of hash rate. In fact, the next difficulty adjustment in 12 days is slated at the moment to be down 16.36%. Why? Well, hash rate. The security of the Bitcoin network plummeted, like many of us said was going to happen, as miners in the south and southeast turned off their rigs to redirect power to the citizenry of the people affected by this massive winter storm. I keep thinking that it's got a name, and I have not actually heard anybody give it a name. I'm sure it has been given a name. I just don't know what the hell it is. So we are now looking at 944 exahashes per second. We haven't seen that low since last September. Yeah, last September. Am I worried? No, of course not. This is the demand response program that many of these miners told the states of their residency that they were going to perform. That they were going to, hey man, when supply is plentiful of electricity, we want it to run Bitcoin miners and all the rest of the stuff that we do. When something like a winter storm happens, we will happily redirect that energy to where it's needed most, and that would be the people that would be affected by storms such as this particular winter storm. Am I worried about it at all? No, not at all, man. I mean, even if it stayed this low for a while, it was not going to affect me one bit. This is more protection than the Bitcoin network actually needs. So it's good. Now, how miners survive this is, I don't know. I mean, it depends on how they run their operations and how much money they've got, saved up for a rainy day and all that. But I suspect that none of them are going to go under. I don't think anybody's going to lose their business because of this particular winter storm. From Coinbase's Quantum Quran, which was Friday's episode of Bitcoin, and I got code with 500 sats, and he says, testing my boosts. I think the sats came through last time, but my message didn't. Oak Grove with 1241 says, why are you so anti-reptilian? It's the funniest thing I've heard in a while. Bubba with 3,000 sats, thank you, Bubba, says, well, our friend Slim, he's talking about Texas Slim, has truly done a thing. Doing stuff is fun. Hope you're good, Mr. Bennett. I'm fine, Bubba. And I hope you and your wife are fine as well. Daniel gave me 1,000 sats, said, oh, and please yell yeehaw in your best Texas cowboy accent, then kindly explain the history of the term yeehaw, as we all love feeling out on random facts. Love your work, old partner. Now that would be Daniel from the Once Bitten podcast, one of my favorite Bitcoin podcasts. If you're not listening to Daniel over on the Once Bitten podcast, you're missing out. So, all right, hold on. See if I can do this without overmodulating everything. Yeah! I have no idea where the hell that comes from. Other than the fact that if it really did come from the Southwest, it was probably something to do with ranching, and it was probably a way to catch the attention of other cowboys on the other side of the herd. That's what I'm thinking, but I do not know. That would be interesting to find out. That might be something that we have to ask Texas Slim about. Daniel with a 2,100 sats on another one says, okay, Dave, we got a deal to facilitate here. We need to get Steak and Shake in touch with Texas Slim. Then broker the deal for beef.com and the Bitcoin ranchers to supply all franchises of Steak and Shake with premium grade, grass-fed, low time preference, home-reared, beautiful beef. This is the kind of deal that the Beef Initiative was set up to achieve by our boy Slim, LFG. Who do we need to sit down with to make this happen? I would suggest maybe we call the chief operations officer of Steak and Shake, not the CEO. CEO, they don't have anything to do with that shit. I mean, they do, but you want the chief operations officer, or the chief marketing officer if Steak and Shake has such a thing. It's, one day I called a major corporation, a provider of 3D software, and I basically emailed their chief of operations, and he got back to me. And the next thing I know, I had a deal for like 50 seats of their flagship software for free to deploy in the laboratory, the computer lab that I was managing over at Texas Tech University. Hey, shit works, man. It really does. Let's see here. Goldman Sachs is the boost from News and Guidance, and he gave me a short row of sticks. Jason High with 250 says, Judge Rackoff sounds more like Judge Jackoff. Our lizard people overlords like to whine about Bitcoin because they are the reason Bitcoin exists. And Flow Captain with 1,000 says, thanks for your judge takedown. I feel better now. Jay with 2,100 says, thank you, love and sats, guys and gals. Boost your favorite Bitcoin news show. And that's the weather report. Thank you all, by the way, for donating to the show. It really helps my mental state. Welcome to part 2 of the news that you can use. AI swarms could escalate online misinformation and manipulation, researchers warn. Oh God, another warning. We're all going to die. Jason Nelson from decrypt.co. Please scare the living piss out of me. The era of easily detectable botnets is coming to an end, according to a new report published in Science on Thursday. In the study, researchers warned that misinformation campaigns are shifting towards autonomous AI swarms that can imitate human behavior, adapt in real time, and require very little human oversight, complicating efforts to detect and stop them. Written by a consortium of researchers, including those from Oxford, Cambridge, UC Berkeley, New York University, and the Max Planck Institute, the paper describes a digital environment in which manipulation becomes harder to identify. Instead of short bursts tied to elections or politics, these AI campaigns can sustain a narrative over much longer periods of time. Quote, in the hands of a government, such tools could suppress dissent or amplify incumbents, the researchers wrote. Quote, therefore, the deployment of defensive AI can only be considered if government by strict, transparent, and democratically accountable frameworks. I think that's a blown sentence there, but a swarm is a group of autonomous AI agents that work together to solve problems or complete objectives more efficiently than a single system. The researcher said AI swarms build on existing weaknesses in social media platforms where users are often insulated from opposing viewpoints. Quote, false news has been shown to spread faster and more broadly than true news, deepening fragmented realities and eroding shared factual baselines, they wrote. Quote, recent evidence links engagement-optimized curation to polarization, with platform algorithms amplifying divisive content even at the expense of user satisfaction, further degrading the public sphere. That shift is already visible on major platforms, according to Sean Wren, a computer science professor at the University of Southern California and the CEO of Sahara AI, who said that AI-driven accounts are increasingly difficult to distinguish from ordinary users. Quote, I think stricter KYC or account identity validation would help a lot here, Wren told Decrypt. Quote, if it's harder to create new accounts and easier to monitor spammers, it becomes much more difficult for agents to use large numbers of accounts for coordinated manipulation. Earlier influence campaigns depended largely on scale rather than subtlety, with thousands of accounts posting identical messages simultaneously, which made detection comparatively straightforward. In contrast, the study said AI swarms exhibit unprecedented autonomy, coordination, and scale. Wren said content moderation alone is unlikely to stop these systems. The problem is how platforms manage identity at scale. Let's read that again. The problem is how platforms manage identity at scale. Stronger identity checks and limits on account creation, he said, could make coordinated behavior easier to detect even when individual posts appear human. Quote, if the AI agent can only use a small number of accounts to post content, then it's much easier to detect suspicious usage and then ban those accounts. The researchers then concluded that there is no single solution to this problem, with potential options including improved detection of statistically anomalous coordination and greater transparency around automated activity, but say technical measures alone are unlikely to be sufficient. According to Wren, financial incentives also remain a persistent driver of coordinated manipulation attacks, even as platforms introduce new technical safeguards. Quote, these agent swarms are usually controlled by teams or vendors who are getting monetary incentives from external parties or companies to do the coordinated manipulation. Platforms should enforce stronger know your customer and spam detection mechanisms to identify and filter out agent manipulated accounts. That's the end of the article. And now this is where I put my tinfoil hat on. This is probably on purpose. Okay, my tinfoil hat is firmly on top of my head right now. And is it possible that I'm going to be wrong about what I'm about to say? Absolutely, I can be wrong. However, it would, if I think about who benefits from this, if I go cui bono every single time something funky is in the air, I start realizing that it's governments who benefit the most from this. Those in the control structure, they are the ones that benefit the most from this. Why? KYC everything. Digital identity for everyone and everything. I mean, not just you. We've already got like MAC address. Well, yeah, machine address code, MAC. Your like your computer has a MAC on it. Every single time that you are online, that MAC address is probably being broadcast. It's not just your IP address. It's the fucking device. The physical device itself has a serial number. That's the MAC, right? That's how like Windows Active Directory can find machines. One of the ways, also by local IP address. But the point is, KYC all the things. It's the Internet of shit times 1,000. Now, where does nostr come into play in all this? Nostr comes into play if you were using, WOS? Oh, hold on. Not WOS. Hold on. Oh, hell. I cannot remember the term for it. But essentially, the people that I deal with on nostr, like people that I follow, people that follow me, people that I reply to, people that reply to me, people that like my posts, the people whose posts I like, the people I zap, all of that goes into basically a score for how my account views other accounts. And the people that I interact with the most are the people that I want to interact with. But then I get like, I'll get like, I don't know, I said something, it was that gold and silver thing that I posted on nostr that I was telling you about at the first half of the show. I got 2 accounts writing back to me telling me that I was stupid, essentially, and that I didn't know what I was talking about. Except those accounts, they didn't even resolve into like the avatar didn't ever resolve. It was just the little robot. You get a little robot, like if you don't put up your own picture. And then they didn't even bother to, rename their account. It was basically their pub key was their alias. And right then, I don't have to deal with these people. I just muted them indefinitely because I'm not going to engage with that bullshit. But now we've got AI swarms, and nostr can be particularly vulnerable because there is no KYC. There's no way to KYC. So if all of a sudden an AI swarm decided to spin up thousands of public-private key pairs on nostr, there's not really much stopping them. So the only thing that can happen, and I don't want to get into, they'll flood all the relays with complete crap. That's a possibility, and that's way over my pay grade on how to fix, so I'm not even going to touch it. But what I can touch is this. I'm not going to see very much of this because I have the choice to use a client that basically says, you don't see anything unless the score of the people that want to interact with you are over this certain number, and that score is given by a mathematical formula of how my interaction looks with all these other accounts. Proof of person, it's like proof of work, but it's not proof of work. It's actually called something. Somebody boost the show and tell me what it is that I'm forgetting, because there's an actual term for this. But there's several clients that use this. Coracle is one of them. Coracle does it very, very well. In fact, Coracle is one of the first nostr clients to actually install this as part of, or as something you can turn on, and it actually works very, very well. You do have to tweak it so that you don't start losing sight of somebody that you follow that maybe they haven't posted in a while or something like that. But this is the way that we can guard ourselves from things like AI swarms. So for the rest of the world, this is going to suck. This is why I'm glad we have nostr. Now, Bitcoin hash rate slides during U.S. winter storm while markets shrug off the mining disruption. So we've already talked about that, but how did they shrug off the mining stuff? Well, this is out of CoinDesk. It's written by Sam Reynolds. A sharp drop in the Bitcoin blockchain's hash rate, which was down 10% on Sunday during this week's U.S. winter storm, is offering a real-time stress test of a local, or rather a concern that was long flagged by researchers. Mining centralization has turned local infrastructure failures into systemic risks. Hash rate is the amount of compute power available to process transactions required to keep the Bitcoin blockchain running at any given moment. And well, we don't really need that one because most of you guys know about that. But while the Bitcoin blockchain continued to operate through the storm as only 10% of the blockchain's hash rate went offline, a growing body of academic research suggests that its exposure to such events has grown. In a 2021 working paper, Bitcoin Blackout, Proof of Work and the Risks of Mining Centralization, researchers Philip Sherkowski and Jiahua Shi found that a regional mining outage in China back in 2021 led to longer block times, higher transaction fees, and degraded market quality, showing how concentrated mining can turn local power failures into network-wide disruptions. That research helps contextualize why rising concentrations in BTC mining matters, as block production has increasingly clustered among a handful of dominant pools. The Mining Centralization Index indicates that block production is now dominated by a small number of pools. Yes, we know. Over the past 2 years, however, the top 2 mining pools have often controlled more than 50% of Bitcoin's hash rate, while the top 6 pools have consistently accounted for roughly 80 to 90% of all blocks, leaving much of the network's transaction processing in the hands of only a few operators. For now, markets appear unfazed as BTC barely moved on the day, but the episode highlights just how the Bitcoin blockchain's growing mining concentration can turn physical infrastructure failures into system-level stress without immediately showing up in the price. All right, well, that makes sense. We've long been concerned about mining centralization, and we've never really stopped talking about it. How do you fix it, though? Well, again, above my pay grade, except to say a miner for every home as part of their heating infrastructure, especially those that are affected by cooler temperatures in the weather. Because many, many times the amount of heat produced is actually cheaper to produce out of a Bitcoin miner than from your actual home heating system. Unless, of course, you're using natural gas and it's not $7 a thousand cubic feet. I'm just saying. And people are using this for all Bitcoin mining for all kinds of stuff. And I always go on a rant about heat recovery because I see so many things. We waste heat like nobody's business. In fact, if you were to look at how much heat we waste on all manner of things and compare it to the trash in a landfill, we would need a much larger set of landfills on the planet because of that much heat being wasted and not recovered, not recycled. We've never really had to think about it before, right? And this has nothing to do with, oh my God, we're going to poison the atmosphere and we're all going to die and blah. No, I'm done with that narrative. However, heat is a very useful product. It can be used for all manner of things. And if you look at heat from the lens of permaculture, where one system's waste is another system's input, then all of a sudden, waste heat is no longer something you just want to throw away. If you can, you want to use that heat. So people have hooked them up to clothes dryers. They heat hot tubs. They heat entire houses with it. They just said, screw the heater. We'll just put a whole bunch of Bitcoin miners in here and we'll just use that in the ductwork to provide heat to the home. And there's many, 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 many other examples. I think I actually saw somebody build a sauna with a whole bunch of Bitcoin miners. That causes decentralization because I would only need like 5 Bitcoin miners. I don't even know if I would need that. I've seen people say that they can heat their entire house and they've got like 2 miners showing in a picture. I'm not sure how that works because I haven't done it myself, but we're on that way. And if you only have 2 miners for a house of 4 and you multiply that by a lot of houses, all of a sudden, decentralization of the Bitcoin mining network is a very real and very lasting potential. So next time you see heat being wasted, think, if in a perfect world, if I could just do anything that I wanted and I needed heat, how would I use that heat that's being wasted? All you have to do is think about it. You don't have to come up with a plan or a design or anything, but just think about it. Think about like how much heat goes out of your house when you dry some clothes. And why do we vent the heat from a clothes dryer out of the house? Because we don't want to heat up the house in summer, but we also don't want the moisture in the house because that can cause problems if your house on the inside is constantly really kind of soggy, right? So you don't want that. But along with the water escaping, that's fine. What about the heat? Actually, I would like to collect the water too. How would you be able to distill that water and actually use it in your garden? And I know it's not a whole lot of water. I'm just saying this is the way permaculturists think. How can I capture that energy? It's not just heat energy. There's water energy that's flowing out of the clothes dryer as well. How can you capture it? And what can you use it for? If I could separate the heat from the water out of a clothes dryer, in the winter, I could just pump the heat back into my house. And it would give me double duty. These are the ways that I really think we need to start thinking. But we're going to talk about something completely different. Now, this isn't a Circle P segment, but I do want to tell you about plebeian.market. Plebeian.market, Plebeian, plebeian.market, where you can get goods and services, and they're selling it in sats, and you can buy it in sats. It's a really, really well put together website. There's like all kinds of products. There's like each product has its own card, and each card has the option to buy it immediately with Lightning Network, or you can add it to a cart and then pay out later, right? But if I click on a card, it takes me to that particular seller's, basically his entire stall. It's not that much different than something like Etsy and all those kinds of things. But this is basically driven by nostr and the Lightning Network, and clearly by Bitcoin and by plebs, just like you, who want to sell you, another pleb, goods and services that they make. I have the Circle P. That's what I do to try to get circular economy to run on Bitcoin, right? This is how I show my love and dedication to all the people out there that want to do something else with their life, like SoapMiner today. He likes making soap, and I know he likes making soap. Why? Because his soap is so freaking good. I don't want to ever use anything else on my hands, my face, my body. It's that good. That beef tallow, it actually makes your hands softer over time because, hey, you're basically using lotion at the same time you're washing your hands. But plebeian.market, it's got all kinds of other stuff from all kinds of vendors. So if you want to help support the circular economy from Bitcoin, go to plebeian.market. And plebeian.market code is now open sourced. You can find it at github.com/plebeian app/market. That's github.com/plebeian app, all one word, /market. The entire code base is here. So not only can you get it, and do stuff with it if you want. You can make comments on it. You can suggest fixes. You can basically do pull requests because it's GitHub. They just released this news as of, I think today this morning is the first time that I saw it, but github.com/plebeian app /market. Go get the code, review the code, look at it. Plebeian.market is now fully open sourced. Finally up today is Sailor because he bought more Bitcoin. In fact, he bought another 2,932 Bitcoin for $264, and his total holdings now reaches 712,647 BTC. Sailor marches on, and so shall I. I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.